Ladies and gentlemen, welcome to the Global Investor Podcast.
All right, let's talk Dubai. After the absolute whirlwind we've seen in the property market, everyone's asking the same thing. What's next? Well, today we're going to dig past the hype and look at what the data is really telling us about 2026. And you know what? The answer is probably not what you're expecting.
So, this is the big one, right? Is it going to be another epic boom? Or is this whole thing a massive bubble just waiting to pop? I mean, you see the headlines, they're all over the place. But what if it's neither of those? What if the real story is something else entirely?
And here it is, the phrase you're going to hear a lot, soft landing. The data is pointing to a market that's not about to crash and burn. Instead, it's growing up, it's maturing. Think of it like this. The crazy double-digit growth we saw, that was the sprint. Now we're settling into a marathon, a more sustainable single-digit growth. And that means the old playbook for making money here, you can pretty much throw it out the window.
Okay, first things first. Let's tackle the biggest myth, the number one fear I hear about Dubai. This idea of a supply tsunami. You know, the story that a tidal wave of new properties is about to hit the market and send prices tumbling.
So, where does this fear come from? It comes from this number, 81,000. That's the number of new units developers have announced for handover in 2026. And look, if that were actually going to happen, yeah, we would absolutely be looking at a serious problem. But here's the kicker. That's not the real number. Not even close. And this is where we separate the marketing from the reality. When you look at what's actually built versus what's promised, well, there's a huge gap. History shows us that only a fraction of what gets announced actually gets delivered on time. So for 2026, we're not looking at 81,000. We're looking at something closer to 35,000. That's less than half. So that tsunami everyone's worried about, it's really more of a steady, manageable stream. So just to break it down even simpler, you have the forecasted tsunami on one side, which is basically developer press releases, and on the other, you have the realistic stream, which is based on actual construction progress and historical data. This gap, this delay, it actually acts like a safety valve for the market. It's a built-in buffer that stops things from getting out of control. But why does this gap even exist? Is it just incompetence? Not really. It's a combination of things. You've got the big, smart developers who are strategically phasing their projects. They don't want to flood the market and hurt their own prices, right? Then you've got the real-world stuff, global supply chain snags, not enough contractors to go around, and of course, smaller developers who sometimes struggle with funding. It all adds up to a natural break on the system.
Okay, so we've established that the supply isn't the runaway train people think it is. But that's only half the story, isn't it? You can have a controlled supply, but if there's no one to buy it, well, it doesn't matter. So let's talk about the other side of the coin, the demand. And folks, Dubai has a massive absorption engine.
Just look at these numbers. They're kind of mind-boggling, honestly. The city is growing so fast, it's hitting its own population targets years ahead of schedule. We're not talking about a gentle increase here. This is a rocket ship. And every single person who moves here needs a place to live. That creates a constant, relentless, and very real demand for housing.
So what does that population growth mean in terms of houses? It means Dubai needs somewhere between 35,000 and 50,000 new homes every single year, just to break even. Now, remember that realistic supply number we talked about for 2026? Around 35,000 units. You see what's happening? The new supply is basically getting eaten up almost as soon as it comes online. There's no massive surplus building up. And here's something absolutely crucial. It's not just how many people are coming, it's who is coming. Thanks to things like the Golden Visa, we're seeing a huge shift. People aren't just coming here for a 2-year contract anymore. They're putting down roots. They're shifting from being renters to being owners. Dubai is now a magnet for global wealth, for people looking for a stable place to live and invest. And when you can get a 10-year residency just for investing 2 million dirhams in property, wow, that's a powerful reason to buy, not just rent.
So, okay, we have managed supply meeting strong demand. That should mean everything just keeps going up, right? Well, not so fast. This is where it gets interesting. The market in 2026 isn't going to be one size fits all. It's splitting. It's what economists call a K-shaped divergence, where some parts of the market go up and others go sideways or even down. We're about to see some clear winners and losers.
So who's going to be on the winning side of that K? It's pretty simple, actually. Follow the infrastructure. The real growth is going to happen in the places where the government is pouring billions into massive, game-changing projects. This isn't guesswork.
It's about looking at where the concrete and steel are going in.
And right now, two areas are screaming opportunity. First, you've got Dubai South. The AED $128 billion expansion of Al Maktoum Airport is turning this entire area into a futuristic aerotropolis, a city built around an airport. That's huge. Then you've got the new Metro Blue Line corridor. This is going to connect areas that were, let's be honest, a bit undervalued because they were hard to get to, like Silicon Oasis and International City. All of a sudden, they're on the map.
Now for the other side of the K, the risk zones. And this is important. These aren't necessarily bad areas. The risk here isn't location, it's saturation. We're talking about places that are just getting drowned in a sea of very similar cookie-cutter properties.
And here's why. Look at this. Almost 90% of all the new supply hitting the market is apartments. Just let that sink in. This is creating an insane amount of competition in already dense areas. You know the ones, like JVC or parts of Business Bay. So while villas and townhouses are still super rare and in high demand, the generic apartment market in these specific spots is facing a real uphill battle.
So, putting all these pieces together, how on earth do you invest in this kind of market? Because one thing is for sure, the old strategy of buy anything and watch it go up is over. It's time for a completely new playbook for 2026.
Okay, let's start with a classic debate. Off-plan versus ready property. Now, you'd think off-plan would be cheaper, right? But what we're seeing is kind of wild. A lot of new projects are actually selling at a premium compared to identical, already built properties right next door. So if you're an investor who wants rental income now and a better price per square foot, the ready market is looking like a really smart, safer bet. Off-plan isn't dead, but it only really works now if you're making a very specific long-term bet on a unique master plan where supply is limited.
So let's boil it all down. What's the strategy for 2026? It needs to be surgical. Number one, target those infrastructure hotspots we talked about. Dubai South, the Blue Line. Number two, if you want income and safety, seriously consider ready properties. Number three, be really careful with those high-density apartment areas like JVC. And finally, number four, focus on quality. New rental rules are coming, and high-quality, well-managed buildings are going to pull away from the pack. That's where the real value will be.
Look, the days of throwing a dart at the map and making money in Dubai real estate, those days are over. The rising tide lifts all boats thing, gone. The market of 2026 is going to be a market of precision. It's going to reward the smart investor, the one who looks past the flashy headlines. So the real question you need to ask yourself isn't boom or bust. It's this: in a market that demands precision, is your strategy sharp enough?